Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class friends, we have solved problem Anil and Sunil, I suppose. Yes. Then in today's class I will take up next problem, problem number 19, page number 80 of your question bank. Already question bank is uploaded, isn't it? So just go through it. Page number 80, question number 19. Ganga and Yamuna are partners in a firm sharing profits and losses equally. Read properly the sentence, try to understand the sentence, each and every word. After reading the entire problem, some students, they will come out with the question, sir, ratio is not given. Because they identify the ratio in numerical form, 2:1, then they will say ratio is there. Otherwise, if in sentence equally means, they will not understand. They will ask, sir, where the ratio is it equal? It's clearly given. So 1:1. They agreed to dissolve the firm on 31st March 2018, on which date the balance sheet was as follows. I'll read out the balance sheet. Asset side, cash at bank, bills receivable, stock, debtors, buildings, motor car, furniture. Liabilities side, creditors, bills payable, reserve fund, capitals. So which should be transferred to realization account? Cash at bank should not be transferred. Remember, cash at bank. So all entries should be passed through bank, not cash. Bills receivable, stock, debtors, buildings, motor car, furniture, all these assets should be transferred to realization account. Then creditors and bills payable, normal liability should be transferred to realization account. Reserve fund is there in the balance sheet, which is not external liability, so should not be transferred to realization account. It should be transferred directly to the partners' capital accounts in their profit sharing ratio, that is equal, isn't it? Now, let me move on. Assets realized as follows: stock, bills receivable, furniture, debtors. See, while dealing with debtors, it is very clearly mentioned, debtors realized rupees 42,600 with interest. So whether it is included with interest or not, we are not concerned about that. We are concerned about how much money is realized by selling the debtors or collecting from the debtors, how much collection is done. Whether it is in the form of interest or the principal amount, whatever it is, we are not concerned about it. How much money we got, that should be entered here under bank account on the credit side of realization account. Then, and rupees 2,000 were recovered for bad debts written off last year. We had written off bad debts during last year, and now the same amount is recovered. I mean, the amount was completely concluded that the debtors will not pay the amount, and we had written off, isn't it? But now it is recovered from those debtors. What should be done? So any collection received from the debtors should be credited to revaluation account as by bank. While realizing all the assets, you have to write under that unrecorded asset. It is unrecorded asset, or that is debtors recovered, or bad debts recovered. That should be entered on the credit side of realization account. Then Ganga took over buildings, Yamuna agreed to take over motor car. You know it very well. Assets taken over. On the credit side of realization account, you will enter the name of the partners by Ganga's capital account, by Yamuna's capital account, isn't it? All liabilities were paid in full Even if it is not mentioned, we must make payment to the outside liabilities, external liabilities, right? Yes. So entry is realization account debtor to bank account liabilities paid off. That's all. Then realization expenses were amounted to rupees 5,000. You know it very well. On the debit side, to bank realization expenses. That's all. So with that, this part is clear. Now let us move on to the solution part. Realization account. Let us start. Realization account. Open the account, draw the columns. Realization account. Yes. Let us start. Debit side. To bills receivable, cash at bank should not be transferred because it cannot be sold in the market. To bills receivable, bills receivable account, how much? 20,000. 20,000. To stock account, 30,000. To stock account 30,000. Debtors account 40,000. 40,000. Buildings 50,000. Buildings 50,000. Motor car 20,000. Motor car 20,000. Furniture 40,000. Furniture account 40,000. 40,000. That's all the assets being transferred. Now let us move on to the other side, that is transfer all liabilities by creditors account. How much? 50,000. By bills payable account. 30,000. Now let us proceed to sell the assets. When we sell the assets, we will get cash, right? So here bank account debtor to realization account. So pass the entry on the credit side. Realization account is credited by bank account. Assets realized. Under that, stock 30,400. Bills receivable 19,000. Furniture 33,000. Refer the adjustment part, not balance sheet now. Furniture 33,000. Then debtors 42,600. 42,600. Then bad debts recovered. Realized or recovered. You just write recovered. How much? 2,000. Now, write the total in outer column 1,27,000. 1,27,000. Then, now proceed to make payment to liabilities. Assets realized, you got the amount. Now, to bank account on the debit side, liabilities paid off. Liabilities paid. Liabilities paid. Creditors. 50,000. Bills payable 30,000. Bills payable 30,000. 80,000. Then to bank account expenses. To bank account expenses. 5,000, that is realization expenses, right? Now, there are assets taken over interest, right? So, let us pass those interests. Assets taken over by the partners. Ganga took core buildings and Yamuna agreed to take over motor cars. So, by concerned partners capital account, by Ganga's capital account, Ganga's capital account, that is buildings taken over, right? Yes. Buildings taken over, right within the bracket. Buildings taken over, amount 60,000, 60. By Yamuna's capital account. Yamuna's capital account. Motor car taken over. Motor car taken over. How much it is? 26,600, right? 26,600. Then that's all. No other interest. Your realization account is done. Close it. Find out the difference, isn't it? Which side is greater? Credit side is greater. That is a profit on realization. Profit on realization. So 293,600 if I am not wrong. Yes, it is 293,600. Is the total of credit side. Write the same total on the other side. 293,600. Difference how much? That is 8,600 is the difference. 8,600 is the difference. To all partners capital account. All partners capital accounts. Capital accounts. Under that, Ganga and Yamuna. Yamuna. $8,600 into percentage is equal 1/2, and here also 8,600 into 1/2 is equal to 4,300. Here also 4,300. Right here, profit on realization. Profit on realization, balancing figure. balancing figure. That's all. First step is done. Realization account is over. In board exam, you will get almost 5 to 6 marks for this account. Then remaining marks will be awarded to the other two accounts, that is bank account and your combined capital accounts. Now let us move on to the next step, second step, that is preparation of combined capital accounts. Yes, combined capital accounts of partners. Only two partners, so provide two amount columns on either side. Ganga and Yamuna. I am writing in short form G and Y. Don't write G and Y. Write in full. Write debit and credit. Very important. I didn't write here, but you must write. Yes. Now let us start. The capital balances given in the balance sheet. Refer liabilities side. Capitals Ganga, Yamuna. So by balance brought down. How much? 75 and 60. 60,000. Then there is a reserve fund, I told you, should be transferred to capital accounts, isn't it? Which side? Opposite side. That is, by reserve fund equal, write the ratio 1:1, 1:1, 10,000, so 5,000 each, correct? 5,000 each. Write it. Then what? That is profit. Realization account added to all partners capital account. So all partners capital account is credited by realization account. Realization account. That is one is no need of writing the ratio here because it is already distributed over there. 4,300. 4,300 is done. Then assets taken over by the partners, isn't it? Refer realization account. Ganga's capital account added to realization account. Yamuna's capital account added to realization account. So Ganga's and Yamuna's capital account added to realization. We will pass only one entry here, and we will write assets taken over. If we pass individual entry, then to realization account, buildings taken over in Ganga's column, to realization account, motor car taken over in Yamuna's column, like that. No need of passing two separate entries, pass only one entry, right? To realization account, assets taken over, how much? 60 and 26,600, right? Yes, that's all. Anything else? That's all. Yes. More to the last part. Final payment, isn't it? Close the capital accounts. How much was the total? 84,300 on the credit side. Write the same total on the other side. 84,300. and 69,300. 69,300. That's all. Find out the difference. 24,300. 42,700. 42,700 to bank account final payment made. Final payment made. Final payment made. Balancing figure. It's done. Your capital account is done. Now let us move on to the last part, bank account, right? Yes. Open bank account. Don't write here to balance carried down. Firm is closed. No question of bringing down the balance again. Clear. Final payment is made. Firm is closed. Bank account. Write debit and credit. Write column headings. Provide for JF both in realization account and in bank account. Provide for JF. Debit credit. Particulars amount in rupees. Particulars amount in rupees. Write in full. Otherwise, you know the consequence. I told you many times. They will deduct 1 mark or 2 marks, isn't it, for not writing those things. If your paper fetches 100, reviewer definitely will deduct 1 or 2 marks. They will reduce it to 99 or 98. Remember. Yes, last part, this bank account, right? Start with the opening balance. To balance brought down. To balance brought down. Brought down. How much is the amount? That is 25,000. 25,000. Then to realization account, assets realized. Bank account added to realization account. That is we got money by selling the assets. Realization account, assets realized. How much? See there, 1,27,000. Now, payment of liabilities by realization account. Right there, assets, liabilities paid. Liabilities paid. Write the total amount. How much it is? 80,000, right? Yes, 80,000. Again, one more liability, that is expense or realization. So realization account, expenses. Expenses, how much? 5,000. 5,000. What else? By, that's all. Make final payment. Capital account added to bank account. So bank account is, in bank account we have to enter on the debit side, isn't it, or credit side? On the credit side, bank account is credited by capital account. Ganga's capital account, final payment. Ganga's capital account, final payment. Yamuna's capital account, Yamuna's capital account, final payment. How much? 24,300. 24,300. Then 42,700. 42,700, isn't it? That's all. Check whether it agrees or not. Must agree. It agrees. 1,52,000. 1,52,000. That's all. It's done. Problem is solved, right? Yes. Now, but there is a difference of rupees 2,000 as per the answer given in your question bank. It's wrong actually, because a 2,000 difference comes because they didn't consider this realization of bad debts written off, recovered. It is not considered, I suppose, but it must be considered because unrealized asset it is. Bad debts written off last year. Now we are getting the amount, means we must give credit to realization account. That's what, there's only 2,000 difference we are getting in realization account, but this is the correct method, so make sure of it. Now take down assignment. Solve the same problem as your assignment question. Take the same question as your assignment question and solve it and submit on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.